All right, now bringing in the income statement, we have this 37 marks right here. Now so the format, you by this time you already know the format of your income statement. So we need to calculate the amount of sales. So now we are given the information here. Information number A, the markup achieved is 160% on cost, and we are also told that the correct gross profit is 14,881,600. So remember, how do you calculate the gross profit? Sales less your cost of sales here gives your gross profit. All right, now we are already told that our gross profit here is 14,881,600. And again, this amount we would have got it by separating the cost of sales from the sales. Now we need to adjust for sales and also the cost of sales. Now on the information here that is given, the sales is unknown and the cost of sales is also unknown. All right, so this is something that we have to know. Now the sales will be calculated 260% for 160% that we are given. Remember, the markup achieved was given as 160%, so we need to add 100% to that, which would give us the gross the amount for sales. So we multiply by the 14 million, that is 14,881,600, this part. And let's see what that gives us. 260 over 160, we say equals, we multiply by 14,881,600. So that gives us 24,182,600. That is the amount for our what? For our sales right here. Now again, cost of sales, we would subtract cost of sales. So how would we have got this amount? Remember, sales minus cost of sales is equal to this. Or we can show by calculation in this way. We say 14, again, our 14,881,600. We multiply. Remember, cost is always 100%. We divide by 160. Let's do that. Let's see how much it gives us. 14,881,600 multiplied by 100 divided by 160. So that gives us 9,301,000. So let's see if we are correct. So 24,182,600. We subtract the answer that we got. Yes, we are correct. We are getting the gross profit as 14,881,600. This is for the sales part, for the revenue part and your cost of sales. Now we need to add other incomes. We need to add other incomes. Now we need to scan what other incomes do we have. What other incomes do we have? Now when you check on the information provided, we have your sales, cost of sales, directors fees, audit fees, advertising, sundry expenses, trading stock, deficit, bad debts recovered. Yes, we have a bad debt that is recovered of 5,800. That's another income that we have. So bad debt recovered of 5,800. Now let's proceed. Now we also have our rent income. Our rent income. Now we might have information on rent income. How much is our rent income here? Let's check. Our rent income we are given is 208,250. 208,250. Let's check for any information basing on rent. So the rent income, yes, we have information number G. Now the premises have been rented for the past 5 years, and the rent for March 2021 has been received and recorded. Due to the lockdown, the rent was decreased by 25% per month for only three months, from 1st April to 30 to June 2020. Now we need to draw the timeline. So remember, the financial year begins on the 1st of March 2020 and it ends on the 28th February 2021. Okay, now let's try to put this information that we are given here on our timeline. All right, so we are told that the rent was decreased. Let me just put my 1st April here. Let me just put my April and June here. Now the rent was decreased by 25%. So from this period up to this period, I was receiving 100%. But due to COVID and lockdowns, the rent was decreased by 25%. So it means for these 3 months from April to June, I was receiving 75%, not the 100%, because we have decreased the rent by 25%. So 3 months I've been receiving 75%. From 1st March to April, it's 1 month. Then from June to March, remember they say the rent for March has been received in advance. So let me just put my March here, because we want to adjust for March. So the rent for March has been received in advance. So how many months from June to 31st? Let's just say it's 31st March. How many months from June, 1st of June, 31st of June to 31st of March? So we won't count June, because the assumption is gonna be, if it's for 3 months, this decrease of 25%, then it means it began on the 1st of April up to the 3rd of June. So I will count July, August, September, October, November, December, January, February, March. So this period is 9 months. So 9 months receiving 100% plus that 1 month, which is totaling to 10 months. So 10 months is equal to 100%. So we can multiply 100 times 10, that will give us 1,000%. Then we can say the 75% was for 3 months. So we multiply 75, we multiply by 3, and that gives us 225%. So the total percentage is 1,225%. Now let's adjust. So we can simply adjust for the 10 months. So I will say the total percentage for the 10 months was 1,000. 1,000 divided by the total percentage, 1,225, multiplied by the amount of rent given, 208,250. Now this amount is going to be equivalent to the total rent for the 10 months, where I was receiving the 100%. Now I'll explain why I took the 10 months instead of the 3 months. All right, 208 is 208,250. So the total rent for the 10 months is 170,000. Now remember, they said the decrease was only for 3 months. So after June, we had gone back to the 100%. So we have received up to what? Up to March. So that's like 10 months. From the 1st of March up to here, it's 1 month. Then from the 1st of July up to the 1st of March, that would be 9 months. So 9 plus 1 will give you the 10 months. Okay. So I'm adjusting. So this one is equivalent to 10 months. without the decrease. So I can simply divide this amount by 10. Then the monthly rent would be 17,000. So I go back to the income statement and adjust this balance. So remember, it's received. We have received the rent in advance. So that rent in advance is for March. So March does not fall within the current financial year. So we need to subtract the 17,000 on that one. So that will give us a total amount of rent as 208,250 less 17,000. So the amount of rent, the correct adjusted amount is 191,250 rands. So I'm sure this adjustment, this figure has got 3 or 4 marks. So you have to adjust carefully. Again, your timeline is very important because it helps you to analyze the dates and the events which occurred within the current financial year, so that you'll be able to adjust any necessary amounts that would need to be adjusted there. All right, let's proceed. Now we are looking for other incomes. Okay, let's look. What other incomes do we have? So I am seeing a provision for bad debt here. Remember, provision for bad debt can either be an income and also can either be an expense. So here for the current year, it's question mark. But for the previous year, it was 9,800. So let's adjust. We want to see whether we have an income or an expense. Again, let's look. So we are given that information number D, provision for bad debts must be adjusted to 9,350. Again, so if we are saying that the amount for the previous year was 9,800 and this amount has to be adjusted to 9,350. Okay, by this stage you would have known what is meant by your provision for bad debt. So there is a decrease on this figure, and what we have to understand is that if there's a decrease of provision for bad debt, the amount that we are decreasing by would be an income. But if it was an increase, let's say if the previous balance was 9,350 and we had to adjust this figure to 9,800, it would mean the difference between these two amounts would have to be an expense. So it would fall under operating expenses there. So this one, in this case, there's a decrease. How much is the decrease? We say 9,800 less 9,350. So that would be a decrease of 450. So a decrease of 450 is our what? Is our income. So again, we come to our income statement. We adjust provision for bad debts. Provision for bad debt adjustment, open bracket, 9,800 less 9,350. That gives us 450 as our income. Let me just draw, yes, a line to separate the calculation and the answers there. All right, now let's look for any other income that we might have. All right, so whenever you're doing your income statement, guys, you have to make sure you scan all the information. You scan each and every information that is given. You don't just rush to write only all these items given here and not adjust. The reason why we are giving you this additional information, one day you'll be accountants. For you to make a decision, you have to adjust your figures correctly and neatly. Yes, okay. Now let's look for, we are seeing information number I. there is a sale of an asset there. Remember your asset disposal. There is a sale of an asset there. They're saying an old vehicle was sold for 88,400 cash on the 31st December 2020. Okay, this has been correctly recorded, and the details of the delivery vehicle sold are as follows. The cost price 198,000, and the accumulated depreciation on the date of disposal. No, this is very important. On the date of disposal, it's 115,500, and we are also required to provide depreciation for the following: on vehicles 25% on cost, then equipment is already calculated for you. So we want to identify on whether we have a profit on sale of an asset or a loss on sale of an asset. But I'm not going to waste the time by doing the asset disposal again. There will be a video that will be posted for asset disposal on how you can calculate using the asset disposal. All right. So now we are told that this asset was sold for cash. So we have received an amount on our bank as 88,400 cash. Now we want to calculate on whether we made a profit or the loss. So how do you calculate the profit or loss? You need to look at the amount received, or the amount that you got in your bank account, the amount when you sold the asset, versus the carrying value of the asset at the date of disposal. All right. So the amount here is 88,400. It's versus the carrying value we don't know, but we can calculate the carrying value. Remember, the carrying value is equal to cost less the accumulated depreciation on the date of disposal. So the cost on this date, it's 198,000. We subtract. We were told that the accumulated depreciation on the date of disposal is 115,500. All right. So the difference here between these two figures, 198,000 less 115,500. The difference is 82,500. So our carrying value is 82,500. Now, remember I said, if the amount which we received is higher than the carrying value, remember this is the book value, it means we have made a profit of which would be the difference between the two figures. But if the amount which we would have received is less, or would have been less than the carrying value, it means we would have made a what? A loss. So the difference between these two amounts, it's going to be a profit on sale, which is a what? An income, this one. So the difference would be 88,400, which would be 5,900. 5,900 is the profit that we have made. So we can then come to our income statement. Profit on sale of an asset is equal to 88,400 less 82,500, which gave us 5,900. That's our income there. Then we are done with our income. So we can now add, so we can get the total amount of other incomes. 5,800 plus 19150 plus 450 plus 5,900. So which gives us 203,400. 203,400. So we need to total these two so we can get our gross operating income plus 14,881,600. That will give us a total amount of 085,000. All right, so this is our gross operating income. All right, this is the income section. We are done with that part. Now let's go to our expenses. Let's go. So remember, they said some figures have been adjusted for you in the answer book, so I'll just write down these figures which we are given. So we would have to less our operating expenses. Would have to less our operating expenses. Number one, we have your director's fees. Your director's fees, you'd have to write in full. Your director's fees for 836,000. And we also have our audit fees. We have our audit fees, which is 497,200. We also have our advertising. So this income statement was a very easy one. We have advertising 342,400, because one of the trickiest item would be your director's fees there. I found out that most of your grade mates, grade 12s, they find it difficult to adjust either for director's fees or the rent. So you have to know that if this one is a little bit difficult, this one will be very easy, or vice versa. All right, we are also given the sundry expense. Our sundry expenses, which is 88,400. Now we need to look. We didn't look for a surplus. I just saw that we have a deficit right away. So we have a trading stock deficit. So remember, we had 2 million, which was our amount, which was given on the trial balance for trading stock. There we go. Trading stock is 2 million. Now we calculated the value of closing stock as the closing trading stock on hand. This is the amount that we have. So there's a decrease there. So a decrease shows as deficit 1,704,000. So that deficit amounts to 296,000. Yes, that would be your trading stock deficit there. Then we also have, let's look for other items, which are our expenses. Then packing material. So for packing material, no information. So we have no information. Packing material, we just told you that the packing material used during the year. So the expense there, it's 39,700. Again, you can play along this calculation. You just open your brackets, you look at the amount that is given for packing material here. What do we have? Packing material, we have 45,800. So you would say 45,800 less the difference, which would be the decreasing value of, so 45,800 less the 39,700. So we have decreased it by 6,100. So this one is the one that is used, which is a what? An expense. Yes. Let's proceed. Now we are looking at, we have information here, information number C. So we have a bad debt. Our bad debt is given as 28,800. We have a 28,800. Now we need to look for any information. We need to look for any information that relates to bad debt. Okay, just a second. Okay, yeah. So bad debt, let's look for any information. Information A, we've dealt with it, it's out. Information number B, it's out. Information number C, we received and recorded 9,750 from an insolvent estate of a debtor which paid out 65 cents in rent. The remaining amount must be written off. Okay, let's write it off. So this person was owing us an amount of X rent, but today this person came to pay 65. Let me just convert this one to percentage. So today they paid 65 percent of the amount, that which is equivalent to 9,750. So we know that the amount that has to be written off is 35% of this amount. How much was it owed? So again, let's just reverse this calculation. So we would have said 9,750 is equal to the amount that we don't know over 100. We multiplied it by 65. Sorry. The amount that we don't know multiplied by 65 over 100, which would have given us 9,750. So we just want to calculate this amount, the original amount that this data owed us. So the calculation will go as 9,750. We multiply it by 100, then divide it by 65. So original amount was 15,000. This is the amount that the debtor owed us. So this person came to pay 9,750 of this 15,000. The remaining, or the difference between these two, must be written off. So we subtract 9,750. That will give us an amount of 5,250. So we come to our income statement, we add 5,250, close the brackets. Then the total amount of our bad debt would be 34,050. Yes, that's all for today. Thank you guys for watching. Stay tuned for part 3, where we're continuing with our income statement there. Don't forget to subscribe for more content. Thank you.